Hello and welcome to Leviathan News. It is August 12th, and I'm your host, Samuel McCullough. And as always, I'm joined by the one and only DeFi Advisor.
What's up?
How are you doing?
How's the weekend?
Eventful. Yeah, actually, the weather was great, so we just went to the beach all weekend. It's a nice, great weekend for the beach. But man, it was a big weekend in news on the DeFi side.
Yeah.
With, a lot going on. And so, yeah, it's been pretty crazy. So, DeFi Advisor, before we actually hop into that, let's talk about our sponsors here at Leviathan, and that's YieldNest. YieldNest is what we think is the best AVS service out there. They provide tailored AVS solutions that allow you to go out and deposit some ETH and then go in and earn some AVS yields. So it's a great place to go check out. And they have a liquid LRT called YNETH that you can go and mint today. It's very cool. So go check it out today at yieldnest.finance. All right.
Shout out to Dio.
Shout out to Dio. Okay. Dia, let me ask you a question. What's your opinion of Justin Sun?
Interesting question, actually. You know, such a questionable character. I actually think he's a market mover, not that anticipated. I'm sure so much is going on behind the scenes that we really have no idea. And me personally, I don't really I'm not that much into Tron or any project regarding it, but I can say that, you know, Tron is very common this side of the world. Like, it is taken seriously. People move a lot of money, especially USDT on there. And here, USDT is like much more respected than pretty much most other tokens. Like, if people are willing to deal with each other with crypto, they usually prefer to be paid in USDT. And I've never they always offer well, we can do it either on Ethereum or on Tron. For them it's the same, and they are nowhere else. Like, no one will tell you, for example, oh yeah, send it to me on that L2 or whatever. So I actually think that my feelings about Justin are like kind of mixed. Like, I think he's a genius, but I have no idea what to anticipate from him, you know?
Yeah. So hate him or love him, he's a dominant force in crypto and one of the biggest whales in our industry. And so on Friday, came as a surprise when BitGo, who is the current custodian for Wrap Bitcoin, wrote that they were transitioning to the world's first multi-jurisdictional and multi-institutional custody via unique partnership and joint venture with BitGlobal. And so BitGo is the current custodian for Wrapped BTC. This is the largest Bitcoin stablecoin, if you want to call it that, with one-to-one backing on Ethereum. And it's extremely widely used. It's in almost every single DeFi app across the board. And so while these type of transfers usually draw not that much attention, like if you had a custody provider that was shifting, there was a lot of controversy here because BitGo came out and said that this transition was a strategic partnership between BitGo, Justin Sun, and the Tron ecosystem. And I think that there's a bit more that has to do with how BitGo has been funded. They've been a part of Galaxy Digital for the past couple of years, and there was a requirement that they be paid in case the Galaxy was able to go public. Galaxy has not been able to go public, so I think that they probably went out and were looking for backers, and that's where Justin Sun came in. And this partnership was created. And it's caused a whole round of controversy, which we're going to get into. There's a current debate happening on the maker forums, whether they should essentially close all new WBTC loans, as well as potentially offboard WBTC in the future, which would have seismic effects across the entire industry for WBTC as an asset. And so today, I think we have the perfect guest to come and join us on Leviathan, and that's Sap from Threshold Network. Threshold is a issuer of a decentralized wrapped Bitcoin, if you want to call it that, called tBTC. and they have a really interesting system. That's why I wanted to get Sap on today. So Sap, welcome to Leviathan News.
Pleasure to be here, guys. Thanks for having me on. And
Yeah,
super interesting developments in the decentralized Bitcoin space.
So let's talk about the Maker post, because this is the way that I actually heard about all of this. And I was extremely surprised about this. So Monet Supply of BA Labs posted on the forums on August 11th and said that due to Justin Sun's involvement, this could potentially threaten the operational process and transparency of WBTC. And he kind of likened it to Justin's takeover of TUSD, where Monet argued that after the TUSD acquisition, there was a lot of worrying events that took place, including what he called the resignation of the previous management team, suspension of real-time proof of reserves, and significant depegs caused by interruptions in redemption services. And he also said that some of other of Justin's projects showed what he called worrying signs of possible misappropriation, such as the substitution of Huobi's USDT reserves with STUSD, which is a Justin-controlled RWA project that holds a reserve of US Treasury bills, but hasn't really provided clear audits or evidence that the backing exists. So ultimately, he said that there's Justin's involvement presented an unacceptable level of risk, and so the WBTC debt should be frozen and not allowed to increase more. And this was, I don't know. I mean, I can't really tell if this is an overreaction or if this is on point for Maker. I think a lot of the controversy here is just how people's own personal feelings towards Justin are. I'm not 100% sure about whether this actually goes through in the end, but it's definitely like raising a lot of feathers and creating a lot of questions for other teams that have WBTC onboarded and may want to be looking for different alternatives at this point. So, like DeFi advisor, when you look at this Maker thing, I'm just shocked in all of this, really, because Maker's like one of the premier DeFi apps. It's pretty much the gold standard for stablecoin debt issuance. And if they offboard WBTC, it's going to really send shockwaves across the entire industry.
Kind of already did.
Yeah, that's for sure.
The preliminary ones, you know.
Yeah. So after this post happened, the CEO.
Where are you shocked though?
I think it just has a lot of other. So Maker kind of sets the standard, right? So if Maker offboards WBTC, then a lot of other apps probably are going to have that conversation as well too.
Yeah, you know, Maker, like I don't know when it was exactly, like, but we had a show about it like at least a year ago when we started talking about it, or close to that. That Maker is really moving into that whole RWA model, and like they're getting more and more into it, and I don't know, they're gonna set a new standard for themselves about the different custodians that they're willing to work with, and what kind of transparency do they expect from these entities. And I actually think that I don't know if I'm that surprised by them being kind of doubtful about this development, because there's a lot of money on the table. They don't want to become like Celsius or whatever, and it's gonna get quite messy with RWA, like at least possibly. So I actually do think that I don't know, at least from the way I'm watching it, I'm kind of expecting these DeFi protocols who moved into RWAs to be pretty conservative, at least most time, from the DeFi side of things.
Mm-hmm. I mean, maybe we can start with you here, Sap, and you probably know this better than me, is that since Ethereum has been out for almost 7 years now, 8 years, there really hasn't been, like, WBTC has kind of had a monopoly on like Bitcoin issuance on Ethereum. They've been able to run up their balances. They launched in 2018, January of 2019, and they've been able to run up their balances to about 154,000 BTC currently issued right now. And it's kind of flatlined since then. But since that time period has come, there really hasn't been any other alternatives to come in and really challenge WBTC. Like, why do you think that is? Up until now, sorry, I want to preface that.
No, totally. I think it's a really important question, and it's a question that the whole space seems to be asking right now, where the trust assumptions behind the protocols that we use on a daily basis are being reconsidered in the light of this announcement. So, I mean, in answer to your question, I think the short answer is it's just really hard. It's really hard to get a decentralized network to do the necessary key sharing and signing protocols in order to have a decentralized wrapped Bitcoin product, which is what we strive for here at tBTC. And I think there are plenty of great examples of protocols that have promised to do this, and sadly didn't take the necessary steps or didn't have the necessary design in place in order to make that transition. And I think the best example that I think of when I look at competitors or previous competitors to tBTC was RenBTC, which is another fiasco in terms of decentralized wrapped Bitcoin. And they had their model to progress the decentralization of RenBTC, but timing wise and FTX and these other things, people can read the story. It led to the total collapse of RenBTC and the seizure, at least to some degree, of the underlying collateral, which in a system that is supposedly a decentralized wrapped Bitcoin, it's not an ideal capacity to have. And then you hear BitGo being a centralized custodian all of this time, and everybody's kind of okay with it and going about business as usual. And there's kind of this elephant in the room in terms of the custody risk that BitGo represents. And not to say that it's increased or increasing, or but it's certainly changing with this relationship with Justin Sun, adding a new dynamic to the key management system that underpins the Bitcoin that backs WBTC. So I think that in itself is just kind of giving everybody a little bit of a knock and awakening them from their comfort, perhaps, of just taking custody Bitcoin and centralized products on the decentralized financial markets so seriously. So yeah, long answer to your question.
Can we talk about the economics of the business of wrapping and unwrapping Bitcoin? I'm looking at the WBTC fees, and they charge a 0.25% on wrapping and unwrapping. And I want to bring up the chart that shows just how the supply has gone since then. Here's the 21 shares. And with the flatlining of BTC kind of like where it is at 154, it's been there for the past year. There's almost no volume. It's not like BTC provides a yield through staking or some other services, right? You kind of just have this like one service, which is, it's extremely important, but at the same time, from an economic sense, it might seem that there's other business products that might want to be built out first. Like, this is why we saw the kind of explosion and proliferation of LSDs last couple of years, is because LSDs provide a consistent yield and income for the company that they can charge 10% on top of whatever the earned yield is. But with BTC minting and unminting, you might not have those same economic dynamics.
Totally. I mean, this is such a great area to shine some light on, because I think it really highlights the differences in approach to threshold versus WBTC. And you're exactly right. I mean, there's no native yield on the Bitcoin protocol. There's native rewards for mining blocks, etc. But you can't simply stake your Bitcoin as it is. I know there are products out there developing this. I work for a project called Acre that's also doing this, building on top of tBTC. But the business model here, I think, is, as you can see here, almost where all of the revenue dries up from those mint fees on WBTC, when the minting and the redemptions, the volatility slows down and we're into this stable state, there's basically no volume going across the bridge, or there's a consistent kind of trading volume. But my thesis is that it would probably be pretty low, and have heard that it's not necessarily the most profitable thing to run, WBTC. And I can speak from Threshold's experience in that, in and of itself, the bridging facility is, if you think about it from a product perspective, you've got to facilitate the low friction exchange of value from the Bitcoin chain to the programmable blockchain space, wherever that might be. And I know that BitGo as a centralized custodian, and through the process of minting and unminting, is a permission process, such that people have to come to BitGo, maybe send an email, maybe have a meeting, and tee all of this up in order to actually facilitate that off-ramp process, at least entering into a centralized exchange and custodian. And based on the security model using cold storage, et cetera, then there's only so much volume that it can do without actually needing to make some physical changes. And I think, reflecting that against Threshold as a product, having a permissionless and programmable bridge, that supports the deposit of Bitcoin into decentralized financial applications directly. So this is something that we're working on at Threshold, is how can Bitcoin be deposited from the Bitcoin chain, from a user perspective, directly into a Bitcoin L2, or directly into a different L1, directly into the application that you're trying to fund, and managing that from your Bitcoin account, which I think is super interesting. And the general idea there is, if we can make this as programmable and lightweight as possible, then we can move Bitcoin very easily and with low friction between chains, and increase the volume across the bridge, which I think improves the business model if we can get to that level of fluidity and liquidity at scale. But you have a product designed like WBTC, where you have centralized management and slow mint and unmint and a permission process, and you can never really unlock the full capital flows from Bitcoin to the programmable crypto ecosystem, in my mind. So yes, it's a tricky business to run, and I think Threshold's still early in terms of its volume across the bridge. But I think we did something like 5x our current TVL across the bridge. So just by the nature of our product, we're doing as much volume as BitGo across the bridge with a much lower current TVL. So it's going to be really interesting to see how we can develop this space and bring Bitcoin everywhere.
What's the current TVL, by the way? Like, what's the market cap of WBTC, and what's the market cap of tBTC?
Well, I have it right here. So the market cap of WBTC is, they have 154,000 WBTC that's been minted. So what? That's like 6 billion or something, 7 billion. And then tBTC has about 190 million right at the moment. We've got about 3,000. So yeah, so Seb, I did want to ask, with the introduction of restaking, it seems like there's a new potential yield source that's been added on that might make the economics of wrapping and unwrapping Bitcoin more profitable. Because if you have all these like BTC AVS layers on top, that you're able to restake your Bitcoin, get economic security, and get paid for that. Now that might unlock new ways for like companies like yourself to issue Bitcoin and then add an extra yield on top that can provide consistent recurring income.
Yeah, absolutely. I think there's a really interesting, developments in the AVS space for collaterals like Bitcoin that have these great security guarantees but don't have any native yield. And that's almost relevant to what I mentioned about Acre building on top. And I think that the positioning of tBTC is such that we want to be a general platform that supports these kind of integrations, such that Acre can build on top of us and other yield protocols can build on top of us. But going after the native yield as a product ourselves, I'm not exactly sure how that fits in for Threshold per se for tBTC. But all of these use cases driving volume, like for example, if you wanted to earn yield on your Bitcoin, you can deposit it directly into an app like Acre, earn Bitcoin yield, and all of this is facilitated by tBTC. So the more applications that are building and supporting those direct Bitcoin deposits will help to drive volume. And yeah, I think there's other business models that can be applied as well, but the bridging model is currently what we're working with.
Yeah, and also like growth in supply of whatever market cap you have is really dependent on the apps that are built on top. So, taking a look at the MakerBurn website, we can see that there's about a total of 155 million DAI that's been minted against the 3 WBTC pools. And so, this is just one of the many apps that has WBTC added to it. And
yeah, but it's a very big percent of WBTC, like relatively, no?
I think, like there's about $6 billion, about $6 billion, $7 billion worth of WBTC minted. So this is, it's quite small relative to the total amount of WBTC, but WBTC has a head start in essentially that it's been integrated everywhere. And this is the issue if you're like releasing any type of new collateral.
It's mostly, I think, by like at least the simple users, they pretty much consider it up till now like a monopoly. I don't really think that alternatives such as tBTC were very common. I personally only found out about it like I think a few months ago through our friend CurveCap.
Mm-hmm. Yeah, there are certainly many different implementations arising at the moment in this whole kind of Bitcoin renaissance and Bitcoin L2 space that's emerging. Babylon, Bitcoin staking, these big actors now building in the Bitcoin space, and the simple emergence of Bitcoin DeFi. I think there are a lot of new protocols jumping up, but exactly as you say, like the incumbency of not only of TVL, which is an important factor, but the incumbency of other protocols out there, like just getting listed on Maker or Aave or getting an Oracle that is supported on these protocols. You need to have a long tail data trail of your trading activity and your volume and the price stability, peg stability, all of the audits, go through the governance process. There is a slow process out there in these decentralized applications for listing, which I think is completely appropriate, but it also creates some difficulty for protocols that are launching. And during my role at Threshold DAO, as I was working on the growth as the growth lead for tBTC V2 rollout, we basically face this on a regular basis. It's like we have this amazing collateral, permissionless mint and redemption directly from Bitcoin. We want to get it listed everywhere. But you need to have the Oracle, you need to have the volume, you need to have the liquidity support and these things. And it's a challenging task to get that all spun up. But I think we've done a really good job at that at Threshold. But these are all the challenges that these new Bitcoin assets that are emerging will be required to face as well. And I think, given that there are these security concerns around BitGo and the changing custody, all of these new projects need to really consider their custody as well, which is something that Threshold designed for from day one.
This is a very interesting moment in BTC on Ethereum, really. Like it's the first interesting moment of BTC on Ethereum in a way, because it really is. It's like a junction, because you never know how protocols are gonna like react, and in a way, like I don't know exactly like what are the considerations of BitGo by doing it and changing the structure of WBTC, but they did take kind of a bet here, and at least with Maker, you see that some people are going to be hesitant about this kind of a change. So it's a very big opportunity, for alternatives such as tBTC and others. I really think it's a very crucial moment for this side of the industry.
Sep, I have a question for you. And, as a show that really covers more Ethereum topics, I'm a little not in the know about what makes it so hard to create a decentralized custodian and wrapper for BTC. Why is what are the reasons why that Bitcoin is just not that great for being able to port over into the Ethereum ecosystem, and that the default custodian outcome has been this centralized service?
Yeah, I'll try my best. There are certainly some areas where my expertise falls down. But the long and the short of it is that Bitcoin and Ethereum don't natively interoperate in any way. And Bitcoin also has a very limited support in terms of programmability on their side of the chain. So there's no native Bitcoin burning function if you were going to stake Bitcoin, for example. So there's this functionality limitation on the Bitcoin side of things. And then there's the management, the decentralized management of the signers that manage the Bitcoin multisigs that actually custody the Bitcoin. So if you take Threshold as an example, we have the signer set that participates in our wallet creation. They all manage a Bitcoin multisig that gets sharded between the nodes, and they perform this signing procedure whenever we need to mint or redeem Bitcoin from those wallets. So if Threshold didn't have its network of nodes, then we would not be able to perform that decentralized signing ceremony. And instead, other protocols just defer to managing it via a multi-sig or some kind of permission process that does that. So yeah, I guess you might have missed it, Sam, but the primary thing there just being that they don't natively interoperate, and you need some kind of interchain messaging. And you need to understand the state of each chain, such that you can guarantee a mint is authorized appropriately and has reached finality on Ethereum. And so too for Bitcoin, you need to have the Bitcoin finality attested to the Ethereum chain in order to do that minting process, and managing the agreement between the nodes in a decentralized and kind of way is where Threshold Network comes in the Threshold case, and where the custody solution for other crypto projects comes in as well. So depending on how they're managing their signing and how participation in that signing is managed and gated, that's basically one of the primary challenges with creating a decentralized wrapped Bitcoin.
Yeah. Go ahead.
Go ahead, Sam. Go ahead.
No, you go ahead.
How do you I think it's a very big challenge, and I'm curious about how do you guys approach it? Like, how do you convince BTC holders to take their BTC and open a whole new world of opportunities? But how do you actually convince them that they don't take on a lot of risk in it? Like, how do you make sure for them that it actually is going to work, and that their BTC is safe and guaranteed?
Right. I mean, convincing Bitcoin holders is not an easy thing to do. Bitcoin maximalism is a real thing, and I completely get it. There's a demographic of people out there that are just in Bitcoin; they're not in crypto, and they also hold big bags of Bitcoin. It's very real. So, I mean, the short answer to it is you want to provide a solution that will survive, and I think that's something that Threshold is really focused on, and that's the longest surviving asset out there will have the best chance of kind of seeing those user flows. And then, I mean, the main thing as well is the application layer that you can build as well. It's like, if you can manage a Bitcoin native experience and you don't need to onboard somebody to Ethereum, you don't need to kind of get them to set up their external wallets or anything like that, and it just looks like Bitcoin to them, which is part of what Threshold is building to, and Acre building on as well, is this native Bitcoin experience. Like, how can you use Bitcoin, your Bitcoin account, as the account management layer for your crypto? And then how does all of the complexity of liquidity pools and bridging and lending or whatever it might be abstracted away from the user? So I think Bitcoiners as a whole, if they have a very compelling product, maybe they're more likely to want to use that product, especially if they can earn yield on their Bitcoin. It's decentralized. They've had their fears of Celsius and these other things, allayed by the transparency and the visibility provided by an on-chain experience. These are the kind of things that people building in the Bitcoin product space are considering, I would say. But yeah, at the end of the day, Maxi's gonna bury their Bitcoin private key inscribed on a piece of iron in their backyard, and we'll be pretty happy about that as well. So some people we won't be able to reach. But I think there's a significant demographic that we can bring over to the DeFi space.
For sure. For sure. I mean a bit. I'm referring a bit more to the redemption process. Like if, for example, how easy and sure for someone to that like decides he wants to take his tBTC and like bring it back to BTC. How simple is that? How guaranteed is that for them? Because it's probably like the biggest obstacle. No, otherwise they will like want to just go for the yield. Like many times, like this population that will significantly grow as the more like the metric that I'm referring to like will be in a better situation.
Yeah, well, I suppose from existing users, we haven't had a redemption that hasn't gone through. It's reasonably straightforward from the DApp in terms of the unminting process, redeeming to your Bitcoin account, and we haven't had any issues with that. I think talking to someone about signing over there, because I mean essentially you do need to exchange custody for to someone else, even if it is a decentralized network. It's going to be the same challenge to convince them that their Bitcoin is safe and whatnot. But our existing user base, existing DeFi users, people that are using Bitcoin and DeFi and then want to consolidate back to the main chain, people that want to exit WBTC, that's a really big one as well. Like, how do you get from WBTC to Bitcoin? And we actually provide probably the best option for that, even better than BitGo, because it's permissionless. So people are happy with the experience so far, but there's different demographics out there. Yeah, that's been one of the interesting things is getting some redemption pressure because we are a permissionless off ramp from the Ethereum DeFi ecosystem back to Bitcoin main chain, and I think there is just an appetite for that kind of service, given that people really do trust Bitcoin mainnet, understandably.
Yeah. So my kind of feelings on all of that is that I think we're in this really weird place right now, and the questions around WBTC I think are quite broad. And if you look at the like overall minting of these type of wrappers on ETH, the market's been a little strange, right? So this is two graphs that were published by Hash. First, you can see the run up in Bitcoin wrappers starting in 2020. Around that time, there was some other competition. So there was IMBTC, which peaked out at about 42% of the total like BTC stablecoin supply. REN peaked at about 18% a few months down the road before they collapsed. And then Huobi also had HBTC as well too, which was deprecated at the end of 2023. And now we're at a point, I know this chart is a little small, but really WBTC has a 98% or almost 99% dominance of the total wrapped Bitcoin supply. And so, looking at the other assets, and I mean, this is yours included as well too, SAP, is that, for tBTC really to start to make a dent in the market, it needs to get picked up by DeFi apps, but to get picked up by DeFi apps, you need more liquidity. And then you also need more supply as well too. It's almost this weird chicken and the egg problem where the alternatives, even though people might want them and see that long-term it's a better solution than what WBTC has to offer, there just isn't the ability to scale into those assets at the moment. I mean, $200 million is a lot, but in the kind of grand scope of things, it's just like pocket change for a couple of BTC holders, right?
Totally. Yeah. I mean, this is not a great chart for tBTC, but I will say that this is pre V2 launch, which was in 2023, and this was for our V1, which didn't scale as well as our current solution does. So the numbers probably reasonably different there now, but I also point out that pretty much every other competitor on the market has disappeared at this point. But you're absolutely right. Like we're talking like vast sums of money here, vast amounts of Bitcoin, even WBTC is a small drop in the bucket in terms of the global Bitcoin supply. So I mean, while there's like all of this framing around WBTC and tBTC as competition, which they are to an extent. I also know that our industry is very collaborative, and we have a great minting solution here. We have a great way of actually turning Bitcoin into a programmable asset into chain. And from the looks of things, the product isn't working out so well for BitGo as it is. So, I mean, we're definitely open to collaborating. Like, how can we work together as an ecosystem, as a Bitcoin ecosystem, to bring more Bitcoin into the product space? And as of course, tBTC being a great programmable version of that, but there are many others popping up as well that have different trade-offs, different demographics, and I think there's a lot of opportunity to collaborate in the Bitcoin space here. And yeah, if WBTC needs a minting provider, then I think Threshold would be a great option for that. And I don't think there's anything technically stopping that. But yeah, I'm open to how this all evolves, and to not just get pleased when we see BitGo getting, or WBTC getting some bad press. I think the real thing here is to increase the pie for everyone and bring more Bitcoin on chain into the programmable ecosystem. So I think that's what we're focusing on at Threshold.
Yeah, I just keep coming back to the economics of all this wrapping business. There's a great tweet from Hasu, who posted, like, the most interesting part of this is it's not that they changed custody for the model of WBTC. It's that BitGo clearly wanted to exit, and Coinbase didn't acquire it. Also, Galaxy Digital didn't try to acquire it as well too. So, like, what's going on here? Why didn't Coinbase take this over? Like, what did they see? Maybe they saw those charts that we were looking at and saw that supply has pretty much been fixed for like over a year, and there's not much money to be made. I mean, you have to run all the servers. There's probably a lot of back end infrastructure that goes into ensuring the bridge, since it is a centralized bridge, to make that work. And maybe the economics of actually buying out WBTC didn't make sense. Maybe they're burning through more cash than we're seeing.
Yeah, I think it's definitely a good question to ask, and there are other players in the space. But if you consider these centralized regulated entities, what is the business case for onboarding 150,000 Bitcoin kind of liability onto the balance sheet? I don't know if it makes sense for many of these projects to take it on for some of those regulatory reasons. And then as well, from a product perspective, like, how is the WBTC product ever supposed to generate meaningful revenue when it's permissioned and very low latency and has no programmability? Like, I mean, obviously it has programmability as an ERC20 token, but I'm talking about interchain, cross-chain Bitcoin programmability, which is something that hasn't really been built from the BitGo side of things. So I'm not sure. I think the idea of like Bitcoin account management layer is still a pretty nascent idea, and also not necessarily one that's obvious to chains that are building their own chains, even though they're all part of it. So I'm not sure. I'm not sure exactly why Coinbase didn't jump on there, but I think there's a few reasons why it wouldn't really make sense for them.
I look at it because they're issuing a stable coin. Essentially, it's a Bitcoin denominated stable coin that they're issuing with WBTC. Same with you guys as well too. And if you look at any other stablecoin provider, there's always some type of yield that they capture. And this would be, so if you're looking at Circle's able to take the cash that they receive to mint USDC with, or Tether as well too, and then they're able to turn that around and put it into treasuries. For the LSDs, they're able to stake the ETH and then earn the yield on top and take a small percentage, like 10% of the total earned yield. And so this allows them to scale. There's really economics to scale into the billions of dollars. And so maybe the economics are broken because the fees are only generated on the mint and unwrap, rather than having like a small interest rate that's added onto the like actual holding, right? So over time, you could charge a 5 basis or 10 basis, or I don't know, some sort of market-driven interest rate for issuing this BTC stablecoin. And at the same time, you could lower your mint and unmint fees then, because you're more incentivized to grow TVL, have large amounts of TVL. If people want to swap in and out, that's fine. But then you'd be more concerned about like your total TVL position at the end of the day.
Absolutely. Yeah, I think there's all kinds of creative monetization things you can do, especially once you have a bunch of Bitcoin under management, as it were, in decentralized custody. Yeah, I think right at this stage, profitability isn't the main priority for the DAO, and the main thing still being encouraging adoption. And in actual fact, the mint fee for tBTC is 0 at the moment. I think we have a 20 basis point redemption fee. But that's basically, those trade-offs is we're not trying to monetize the bridge right now. It's quite early to do that in a sense. And we want to create, the best user experience, the best adoption, and get that liquidity distribution, as you say, it's one of those key priorities as well. And then once we have, 10% of the Bitcoin supply as tBTC on the interchain web, then we can think about it in assets under management or some kind of velocity fee or something like that. And I'm just completely spitballing here. There's nothing under works on this that I'm aware of at the DAO. But yeah, trying to get the adoption first, and then figure out the monetization side. There's also some creative tokenomic stuff that we can look at as well, in terms of liquidity incentives, and I look at Curve and Frax and these kind of things as some big liquidity engines out there, and effectively we're trying to build a Bitcoin liquidity engine to an extent as well. So yeah, some cool ideas out there.
What are some of the things that are already possible to do with tBTC on chain? What are the best opportunities that maybe you can share a bit? And maybe if you even want to share a bit about what you guys at Acre, you call it AcreFi?
Yeah, it's called Acre. Yeah, on the threshold side of things, well, I guess I would need a bit of a short list of the integrations in front of me, but obviously liquidity is one of the things. We're listed on Morpho markets as well, with I think Gauntlet and Re7 as kind of risk managers for our pools there, which is cool. Then we're deployed across Base, Arbitrum, Optimism, Polygon, and Solana. We're also live on Bob and Mezzo, which are 2 Bitcoin L2s. And we're focusing on the kind of interchain rollout side of things. So, getting into more interesting places. But I mean, right now you can, basically generate stable yield on your Bitcoin through a number of different ways, either by depositing into a lending market. We're listed on a few different lending markets on L2s as well. We're actually about to go live on GMX, and our proposals reached the final stage in the Aave forum. So some new big tBTC markets coming online pretty soon. But yeah, you can stable LP even with your WBTC as a way of generating kind of Bitcoin price neutral yield, even though you do hold kind of different sides of the pair. So that's one way you can do it. And then Acre is basically trying to take that whole yield discovery process and abstract it from the user, not in the same way they would generate the yield. Acre is kind of designed more like a Lido for Bitcoin, in the sense that it's going after validator level Bitcoin allocation on these Bitcoin L2s as a way of generating yield, which I think is an interesting way to approach it, but potentially integrating some single-sided liquidity, single-sided yield sources as well, I should say. But I mean, the main focus with Acre is the Bitcoin in, Bitcoin out experience that I've kind of been mentioning here, which I think is a bit of a sleeping opportunity that people haven't recognized yet, is that Bitcoin can be your account management layer. Acre has done that already, and it's live on Ethereum mainnet, such that people can deposit their Bitcoin from their Bitcoin account. And then it does this bridging process via threshold and the minting process on Ethereum completely permissionlessly in a decentralized manner, and enables your Bitcoin to be deposited directly into Bitcoin L2s and staking and whatnot like that. So still early in terms of that product launch, but I think this opportunity space to be building on Bitcoin in the interchain ecosystem is really interesting. Hopefully more apps can start to support that kind of thing.
It's very cool. So I think that at the end of the day, the BitGo people are saying that the underlying security, well, Mike said on the Maker forums that the underlying security is the same as it was today. They're going to continue to provide real-time proof of reserves, and the technology is going to stay the same. And also BitGo is going to be a signer on one of the multi-sigs as it moves offshore into, I believe it was Singapore and Hong Kong for custody. But it is raising a lot of feathers, and we are going to continue to follow this story as it develops, especially with the Maker essentially debt freeze and the offboarding, which I asked in a Maker insider about this, and he told me that Monet Supply, who works with BA Labs, it's pretty much up to them. He called them technically an advisor, and it's their job, but you can't ever really think of a time when BA Labs has not had their way and recommendations accepted. So, we had this comment from John Galt, who said that if BTC loses the confidence of the lending protocols and they deplatform WBTC, you're going to see some credit contractions across DeFi potentially. So hopefully we do see some alternatives like yours come in with tBTC and some growth from the like just that chart that we showed earlier. Hopefully you guys can come up to 10, 20, 30% of market share and provide a real decentralized alternative for this Bitcoin stablecoin space.
Yeah, thanks a lot, Sam. Appreciate the encouragement, and definitely going to try our best with that and facilitate Bitcoin interchain. So maybe we can get those numbers up to 10 or 20% of the Bitcoin supply as well. So great things to target.
Amazing. Well, thanks everybody for tuning in. Just want to give a last shout out to our sponsor at YieldNest. You can go to YieldNest at yieldnest.finance and check out their restaking services. They provide what we really like them here at Leviathan. And you can go and restake your ETH now into YN ETH and earn 3.39% from their AVS services along with staking yield. And then additionally with that, you can earn some seeds and eigenlayer points. So make sure to check out the link that is in the show notes and go over to YieldNest Finance today. All right, DA, Sap, great for having you here.
Thanks a lot, Sam. Had a great time, and thanks a lot for coming, Sap. And really, I joined Sam here with all the wishes. I really think you guys are creating something cool, which is really going to be some important infrastructure for the industry to move on. So shout out to you guys, and let's see how it goes. Keep us updated.
Thanks, guys.
Awesome.
Yeah, appreciate it. Thanks a lot.
Thanks, everybody, and we will see you again